Oaktree Capital Management was founded in 1995 by credit investing pioneers Howard Marks and Bruce Karsh. Today, Oaktree has grown to over $180 billion in assets under management and is a leader among global investment managers specializing in alternative investments. All Oaktree investment activities are conducted according to a unifying philosophy that is embraced by our experienced team of specialists focused on delivering competitive investment results. Our mission is to deliver superior investment results with risk under control and to conduct our business with the highest integrity. We have a deep heritage in credit solutions that invest in both liquid and illiquid instruments, sourced directly from borrowers and public markets. We are thrilled that our private credit income solution is now available to investors. The current market environment presents a complex picture, but one that is also ripe with potential for private credit investors. After a decade of near-zero rates, many traditional fixed-income investors have been starved for yield. In 2022, the Fed hiked rates at the fastest pace in decades, and we could be entering an environment where rates could remain higher for longer. At the same time, banks are stepping away from traditional lending areas, creating a large potential opportunity set for private credit firms like Oaktree to step in and fill that void. The private credit market continues to be exciting. Base rates are elevated, spreads are attractive, and the average yield on leverage buyout transactions is in the double digits, while lender protections have improved. Higher quality borrowers, large companies with lower leverage, are also turning to the private market for lending solutions, given the scarcity of available capital from traditional sources. Today, many companies have capital structures that were implemented during the easy money era of near-zero base rates. And we have only recently begun to see the elevated impact of higher rates on levered free cash flow. This might lead borrowers to seek concessions from lenders or additional equity injections from owners. As a result, the availability of capital for new deals may become limited at times, benefiting managers like Oaktree who consider these risks well in advance of them materializing, helping our portfolios withstand volatility and capitalize on opportunities. We utilize a relative value, all-weather approach to investing across the private and the public markets, identifying the most attractive risk-adjusted investments in any market environment. In weaker markets where discounted liquid securities may be more widely available, we would expect a higher public allocation. In stronger markets where returns on public investments may be diminished, we would expect our allocation to private loans to be higher given premiums offered for illiquidity and complexity. This complexity is a key differentiator for Oaktree in that we are focused on off-the-run, more complex parts of the private credit markets that are less competitive and have the potential to offer higher returns. Such opportunities we are seeing today include non-sponsored direct lending, where we lend to businesses that are privately held by founders or are publicly listed, and in large cap lending in support of sponsor-backed leverage buyouts, as well as opportunistic situations for companies in need of bespoke financing solutions. We believe we have built and are continuing to build an attractive portfolio composed substantially of senior secured floating rate loans that reflects our firm-wide expertise in navigating more volatile and complex markets with risk under control.